tax model look like for a real estate investor?
Good tax model.
Yes.
So when you say a tax model, can you give me some?
Okay.
What
Yeah.
exactly
I'm a flipper. I flip
Okay.
houses.
Okay.
How should I be structured? We got an idea from the attorney.
Maybe like corporation or limited
Yeah. Any
partnership?
advice on that? Yeah.
Okay, yeah, I've got some advice on that. One of the things that I learned I screwed up on my first real estate deal that I squared away on my second is that I went out and got my real estate license. And why that was important, it wasn't so I could sell real estate, it wasn't so I could see stuff before anyone else could see it. It's because the tax laws are way different when you have a real estate license than when you don't. When you have a real estate license, or when you have no other job except for real estate, which is hard to prove unless you have a real estate license, when you have that, you are a professional real estate person. Professional real estate person means you're not limited to passive losses anymore. So, for example, if you have a piece of real estate right now and you buy it right, so that you can have your depreciation, your accelerated depreciation for your personal property, for the refrigerators and all that kind of stuff, you're limited right now to $25,000 a year of losses on those. Unless you're a real estate professional, then it's unlimited. So, for example, I bought that first property and ended up getting tax bills at the end of the year that I had to pay taxes on. So the next property that I bought, I set it up so that when I filed my taxes that year, I actually got a check back for the prior 5 years of taxes that I had paid because of all of the depreciation that I had set up properly on this to get. So I ended up getting about $40,000 of cash back at the end of the year, on top of making money all year long. And the only way to do that is either a sole proprietorship or which was the best way, not from a liability point of view, but from a tax point of view, or a limited partnership where you still can use the kind of sole proprietor direct taxing flow through on that. So that's
an LLC, right? That's what you just.
No, limited partnership, not limited liability corporation.
Okay. Tell me that.
As soon as you start talking corporation, you're better liability-wise. So from an attorney's point of view, they always love the corporation. But from a tax point of view, the limited partnership. Now, I had the attorneys that I used to set it up. Some of the properties that I pick up, matter of fact, almost all the properties are limited partnerships with a 1% general partner, and a general partner is a corporation or a limited liability corporation or something like that. So the general partner is that corporation that has all of the liability attached to it. And I'm the 99% limited partner that gets to flow 99% of the profits through that I get to offset the depreciation, all that kind of stuff. Right now, I think I'm carrying forward $4.9 million of depreciation, so I can make $4.9 million this year before I have to pay $1 in taxes. So that's the way you want to set stuff up.
Love it. Love it. All right, Ed, I got a question for you. I'm going to hand you this mic, actually. So I flip houses, you hold. Yes. Tell me why.
First of all, the primary reason is for the tax benefits. I am a higher income earner during my daytime job. I am not a full-time real estate professional. My wife is. So she's my partner on my real estate deal. So I needed the tax write-offs. I didn't need another job. I didn't need the tax liabilities that come from flipping a property, which would be your capital gains and your ordinary income. So that was my first reason. Second reason is because we want to build a real estate portfolio that has that passive income. Flipping is not going to provide that for me. Right. If I want to keep making money, I got to keep going to find projects. I'm trying to do less work going forward into the future, not more work. So, but I think the flipping model is good to possibly provide some cash, some needed cash, some needed money that way, but it's just not something that I was attracted to. I won't say I'd never do it, but I haven't yet in about 6 years.
Thank you. And keep it, I got one more for you.
Sure.
So how do you guys run the bills and the management of these rentals?
Oh, that's a great question. So if everybody
Did you guys hear me?
that.
How do they run the management of the bills and I guess, how you run the ship?
How you run the ship? You marry a good woman.
Amen. Amen. Step ahead of me.
That's right.
Or I got that one at least.
That's right. No, she does. So we run. So we do a few things. Number one, we went out and hired professionals when we first got into it because I think April during her presentation hit the nail on the head that you don't want to skim there. Okay, so you have to have, and I'm sure Alan would agree. You got to have a good accountant. You got to have a good attorney, and then you might want some other professionals in your network as well. We run. My wife does handle the day-to-day books through QuickBooks program. And then she ships those off on a monthly basis to the accountant who takes it from there. Does our reporting for us, our quarterly reporting and so on. So that's how we run that part of it. The management, right now we self-manage everything that we have. That's part of what makes her the real estate professional. My wife runs all the day-to-day operations of whether it's contractors, whether it's repairs or maintenance work, scheduling, coordinating, that kind of stuff. We have some Airbnbs in our units, so she handles the management of that.
Like it. I got one more before you pass it off.
Yes.
How do you determine your rent? Do you make it comparable, competitive? Do you make it more? I know your rehab, so I know that you're more quality based.
Right.
So I never got to ask you. So when you focus on making quality rentals, do you have to charge more, or what's the avenue there?
So there's a couple parts. Was everybody able to hear what George asked?
I'm loud, I know.
Okay. So in order to determine our rents, first of all, we have a certain amount of cash flow that we want each unit to spin off. And I won't do a project where I can't get at least, and I'm talking properly laid out, meaning you take all your expenses into account, including your vacancy and maintenance expenses, right? I have to do at least 200 a door, okay? And that's my bottom barrel. All my buildings right now are doing better than that, but I would consider it if it would be down to that level. But we backward build it from there. So I have to buy right because we're going to put a lot of money into the property. We know our rents are going to be higher than the average in the area because our model is to do high-end rentals in the marketplace. So we're trying to do affordable high-end rentals, really, is what we're looking at. So I think where Alan's doing the luxury stuff, if I were to do a building like his, he may get like $1,800, $2,000 or more for a unit. I'm trying to offer those same type of amenities in strategic areas where I might, for that same looking, same size unit, I might be renting that for $1,400, $1,450. So I'm not doing the $650 a month, but I'm also not at the $1,800, $2,000, or whatever the case may be.
Appreciate that.
Did I answer your question?
You did. You did. Pass it to Eddie. So when it comes to making a quality property or quality rental, this is where you're important. This is where our materials are important. So give us some insight on what kind of material you see people purchase when it comes to their rentals at this aspect.
I would say probably what I see a lot in the city would be, like Alan said, was speculators. A lot of people come in and they want the cheapest thing possible that they can put in real fast and then, flip it and get their money. However, when you cheap on certain things like a floor, you are giving up a lot on quality. I have floors that are 48 cents a square foot. However, do you want to put it into a property and then have to replace it every single time somebody moves out because you're putting in 48-cent floor? So we do have,
Real quick,
floors.
to interrupt you, how do you solve that problem?
How you solve that problem is you want to get something that's might be a little more upfront originally, but something that's going to last. And you can tell by quality on maybe something a little thicker. If you're getting a 6mm floor, maybe you go up to an 8mm floor. Those little intricacies can add a lot more over time as far as lasting, not being as fragile, not breaking easy, not damaging easy. And I think with flooring in general, flooring is a huge part of renovations and flips, and it can be a huge cost if you're buying, 1,600 square feet, and you have 3 properties that you got to put floors in 1,600 square feet, and you try to keep it under $1, and all of a sudden you got to go up to $2. That just doubled your pricing just on floor. So a lot of times, I think what happens is people don't understand or realize how much floor costs up front. But flooring has come a long way, so like you're spending a little more, but the quality just from going from 50 cents to $1 or from $1 to $2 is drastic. So I always would recommend someone to go a little bit more on the floor, just because you want to do it once, do it right, and then not have to worry about it again. Something that's going to last over time.
Can I piggyback on that? So to piggyback on what you said, actually, I buy floors from many times, and in our properties, we don't put anything. We haven't done any carpet. It's all hardwood and tile flooring. And the reason for that is if you're going to look at something as I'm going to hold this and it's my long-term investment, I don't want to have to go back in and do it. I have a situation right now I was dealing with on my way here, where we took some advice on doing a bathtub and a shower and a bathroom where I wanted to rip it out and retile everything and put new in. And somebody came to me with this idea of spraying it, coating it, refinishing it. And I did that 4 years ago, and I'm here to tell you, and it sounded great at the time. It's like, oh, I'm saving myself some money, I don't have to do that. It's been a nightmare ever since. So my tenant has now moved out 2 weeks ago, whatever the end of September was. And here's the part that people miss at times. Not only am I replacing that now because I'm tired of dealing with it, I'm not receiving rent for a longer time because now I gotta get my contractor in there. I'm ripping that thing out like I should have done when the place was being torn up to begin with. Now it's down. And a lot of times people don't count that part as their cost when they're doing things, okay? And that's my opportunity cost, my lost opportunity. So now it's gonna take me probably at least 3 weeks of downtime to get that place up and running. On top of the fact that now I'm pissing my tenant off on the first floor because now the ceiling's shaking and dust is coming down in his bedroom, and he's calling me up on the way down here screaming at me because he's got dust on his bed. So, it's just stuff like that you need to be a long-term thinker. And in that particular instance, I let somebody talk me into something that I really didn't want to do at first. It was like, oh, you can save yourself all this money. And I didn't save myself anything. It's costing me money in the long run. So think quality. I don't care what level rental you want to be at, where you want to be at in the marketplace, but the last thing you want to do is be changing out stuff that you just did a couple of years ago or last year or whatever. It's going to cost you more than if you would have just put a couple extra dollars. The labor's the same, guys. At the end of the day, if you put in that whatever middle floor, or you put in the thicker, better floor, or hardwood floor, the labor's all the same. So what do you say with a few bucks of material? It's not worth it.
Pass it back to Eddie real quick.
Oh, I'm sorry.
Sorry. Eddie, what's an average floor cost? Just so they walk in there with a realistic mindset. So and there's that's a two-part, because you're gonna get your laminate flooring and you're gonna get your vinyl planks or your vinyl flooring.
Right.
I'm not even talking tile or anything, but just to kind of talk on that.
I would say your average cost right now, from what I'm seeing on floor, is probably between $2 and $3, depending on which room you're doing.
You don't sell it to me for that.
Yeah, probably. Yeah, probably would. That's a little bit hard to add value to it.
You gotta get the cheap one that I get.
From what we see is a lot of times you can go, when you're going in your living spaces, things that are not wet areas, like not a kitchen, not a bathroom, you put a laminate floor in, just because it's your most cost-effective floor. It's going to last a long time. It's easier to install. You can get a quality laminate floor, like a 12 millimeter, which is really thick, which is going to last, a lifetime, between $2 and $2.50 a square foot. You can go down to an 8 millimeter and get it for 99 cents or $1.29. But between that range for your laminate floors. When it comes to your bathrooms and your kitchens, those floors are waterproof, so expect to pay more. You're looking between $2 and $4 a square foot for your vinyl floors, which are 100% waterproof. They do install the same way. But they last a lot longer than the.
Where's that flooring at? Where's that flooring?
I actually brought samples.
Come on, man, let's pass these things out.
So
Talk to me in English though, what's that? Explain what that one is.
these right here are my vinyls, my entry level price point vinyl floors, which have a pad on the bottom. They're $1.99 a square foot. However, we do have our contractor pricing. I believe this one comes down to like $1.70. So this is the one George puts in like every bathroom.
Oh.
Is this one, and he gets it dropped down from like $2 to $1.70. So it's a nice little savings
I
there.
think I
But
used one of
it's
these, too.
4 millimeter thick. It's an entry level floor, but it's 100% waterproof. The ones in his hand, he uses, those are the house floors. He uses those for his laminate floors. Those are between 75 cents and $1 a square foot. But then, like I said, we do have ones that are cheaper, but you can also tell that they're cheaper, 48 cents. And then we have
These are the cheaper ones?
our waterproof floors that are thicker, more like your bathroom tile looking. This is what I'm saying, in like your $3 range, but you're getting a floor that's twice as hard as the $2 floor, and 4 times as better on quality on top. The wear layer on vinyl is what's most important. So you go from 6 mil wear layer on that to 28 mil wear layer on this. That's the difference in quality.
Which is the most expensive one? This one right here?
Yeah,
And what's that cost? I'm sorry I didn't hear that
that's
part.
$3.
That's why I don't get this one.
Right.
So you recommend laminate for city wine holes?
I recommend laminate in anything that's not going to be a wet area. I mean, obviously waterproof's always waterproof, but I don't think it's necessary everywhere, personally. Unless your tenant is sitting there throwing buckets of water on the floor.
I've been using a lot of granite. It just makes life easier, even in the city. I guess they each their own, you know. But all right. So I got a question for each of you. You got the mic, so you can start with you. What has made the biggest difference in your business?
The biggest difference in my business, I would say, is the transparency. I know when someone comes and deals with me, when I'm dealing with a new pro, we call them our pro customers, you know, our contractors, property managers, whatever.
Tell them we got the pro papers up there too.
Yes, we have a form in the back if you want to become a part of the email list and a part of our program where you qualify for special discounts. You can just fill out that short form in the back with some information, and I'll take that back to work with me. But I would say the transparency, when someone comes in, they know that what I'm telling them, I'm gonna make sure that you have everything that you need for your project, that you're getting it at the best price that you can possibly get it at. That you don't have to worry about, you know, the materials getting there, the materials not being available or not being delivered on time. Like, I make sure that everything is, your entire project, as far as your flooring standpoint, I help manage that. So it's one less thing for people to have to worry about. So I think that has just become, you know, for the referral business just constantly comes back, and the people just coming over and over again, like, hey, it went really smooth this time. I didn't really have to worry about it. That was the easiest thing I had to deal with as part of this project. So I think that's what's helped us the most this year.
I like that. What has made the biggest difference in your business?
For me, you may think that George put me up to my answer, but he did not. Coming to things like this, reading books, getting around people like Alan, April, people that are smarter than me and doing more than me further down the road than I am. When George told me what he was charging for this, I was like, that's ridiculous. I mean, the amount of value that you got just out of listening to Alan over the last half an hour was worth more than the price of admission, I can tell you that. Cheapest seminar I've been to in the last 2.5, 3 years is like $2,500 for a 2-day event. You got to invest in yourself. You are going to be and become the summation of what you read, what you put in your mind, plus the 5 people that you spend the most time with in your life. So I try to get around people that are smarter than me, do better than me are where I want to be in life and are better looking than me.
You're pointing at me there, or Alan? Which
I was
Alan, it's on you now. What has made the big? Yeah, he has that mic. What has made the biggest difference in your business?
I'm going to piggyback on what was just said, really education, real estate education. So I put aside a certain amount of money every year, a certain amount of time to go and take education classes on real estate, whether it's investing, whatever. Even if it's something that I'm not really sure is going to work, I'm willing to go give it a shot and listen. So to give you an idea, last year I went to a $14,000 week-long class at Harvard on real estate investing, and I didn't learn any more there than I did on a $700 2-day course in New Orleans or whatever. And when I say that, I don't mean to put that down. I got a couple of good ideas there, but it seems like no matter what I go to, whether it's an inexpensive $99 seminar in King of Prussia or a big expensive $10,000, $15,000 one, you get 1 or 2 or 3 ideas. And if you pay attention and really apply yourself, and it's those ideas that help you put projects together. My first big office building deal I did in downtown Reading here in 2001, I couldn't put the deal together. The seller absolutely wanted to sell me the building, and I couldn't figure it out. I happened to go to the Ohio Real Estate Investors Association seminar they put on every year out there. I went to one of the $29, sit there for half an hour seminars on how to do creative financing. I'm like, hey, I think that one thing they threw out works. I put it together, came back here. A week later, we had the documents signed on the building, and I was buying my first 140,000 square foot office building in downtown Reading. So you just got to get out there 2 or 3, 4 times a year, once every quarter, and go and listen to people, and you'll come up with ideas. And you look at stuff, you look at things that are for sale, and you be like, hey, that idea that Ed threw out works perfectly with the way this deal is over here, and you put it together. So, we got a question.
Yeah, let's get it.
I have a question. Something you said earlier, said that you almost never have any vacant units
Yes.
in your commercial properties.
Sorry.
Yes.
In the heart of the city. I'm a little bit familiar with the heart of the city
Okay.
and with the commercial real estate, obviously not as familiar as you guys. That's not the case for most commercial buildings in Reading, Pennsylvania.
You are correct.
So, my question comes, what do you believe makes it so that you don't have that? Because I know from what you stated that, like you said, the price is more now than what it is on Fifth Street Highway, so it's not the price.
So,
So what do you do differently to make sure that your businesses are always full?
So 2 things. One, when we go in, we're not buying a building, we're improving a neighborhood. So, people want to be at like that shopping center at 8th and Oley. They don't want to be in that neighborhood, they want to be at that shopping center. I mean, they might want to be in the neighborhood, but, they will gladly pay more to be there than to be at some other building, half a block away. Same with our downtown locations. Same with the shopping center we just did out at the old A.W. Golden Cadillac dealership on Lancaster Avenue. So that's the first part. We're doing the neighborhood. The second part is we are providing a level of space that is above everything else in that neighborhood. So so when you drive down Penn Street here, or up, either way you go on Penn Street, you're going to see a ton of vacant spaces. Those spaces are not ADA compliant. Most of them aren't sprinklered. Most of them don't have fully addressable fire alarm systems. Most of them don't have proper hood systems to put a restaurant in. The list goes on, and those things cost tens of thousands or hundreds of thousands of dollars. Or in some cases, you just can't retrofit the building with those. So we're very cautious or very attentive when we go into a building to make sure that we can spend the extra money to provide that level of service. For example, if you saw the photo here out there of the 8th and Oley Shopping Center, that one long building, was completely vacant. I mean, the whole neighborhood was vacant. But all the other developers and investors who looked at that, it was so far out of compliance, with all the steps coming up on the front, they couldn't figure out how to make it work. So what we did was we said, hey, you know what? We can't raise the parking lot. We can't lower the building, but what we can do is we can put a big deck across the whole front of the building. So we put a 200-foot long, 12-foot wide concrete deck across the whole front of that building that on one part is on grade for ADA access. Well, as soon as you did that, all of a sudden, we just signed a lease with Domino's 2 weeks ago. All of a sudden, you do that and you got your nationals in there. Once you can get some of your nationals, like the Dunkin' Donuts, Domino's, Little Caesars Pizza, once you can get those, that justifies to the lenders for other small businesses, the mom and pops, that, hey, if that center is good enough for Dunkin' Donuts, if that center is good enough for Domino's Pizza, we can loan money for the mom and pop to be there. And all of a sudden, it's the only center in that neighborhood, or the only building, that it can get the financing for those types of businesses, and they're willing to pay a premium for it.